You know why I was able to make almost $500,000 in this TastyWorks account, and on this small account here I made almost 27, no, almost 27 plus on my small account TastyWorks. Do you know how? One of the things, guys, it is this: picking up the right strike price, and this is exactly what I'm gonna show to you guys in this video. I'm gonna show you everything that I do when it comes to selecting the cash secure put. Okay, very simple. You guys probably never heard this or never seen this combination, like support, strike price, and DTEs. Our very famous delta, which is pretty much 70% of what people normally use when it comes to selecting cash secure put, or pretty much what everyone talk about on YouTube, just copy and paste anyway. The second thing, it is in the money. Why would I trade in the money cash secure put? And of course, guys, annualized rate of return. What I mean is, it is this thing here, which I'm going to explain to you guys. This table, why you should have one as well. Because if you don't have a table like this, trading cash secure put options, naked put options, guys, guess what? Just don't bother. Go and do something else, because that's the first thing you should do as an option seller that do sell cash secure put options, okay? But nevertheless, welcome to my channel. Thank you very much for all the beautiful support. For those of you that wants to learn how to trade in option, come here, guys, to our channel. Click on our playlist, Stock Option for Beginners. Watch all the videos. For those of you that are beginners, it's the best place you can start your journey when it comes to trading options. And of course, from here, you can move to more advanced concepts, which we also have here in our channel. Everything for you guys for free to watch and learn. And a lot of things here, guys, are a strategy you can start to use straight away. And of course, there's plenty of other YouTube channels you guys can go and watch some amazing content, okay? There's great things online, but these things here pretty much to get you guys going with all these strategies, especially this one here, which it is the playlist of all the basic things that you must learn when it comes to trade options, okay? Nevertheless, back here to the PowerPoint, the first thing I want to cover to you guys, it is support, strike price, and DT. And I'm going to explain to you guys why do I go from support, why do I go from strike price, and then I move to DT. These three things here, okay? These three friends here makes one single concept, which is pretty much support, okay? So let me explain to you guys in more details. So let's jump to my trading view chart and explain to you guys the first one, which it is this three, okay? So back here on trading view, as you guys can see, I got the chart here of the SPY, which it is the ETF that tracks the performance of the S&P 500. So we have S for strike price, plus S for support, and plus S plus DT. Okay, so basically we have support, strike price, and DTs. Look at this chart. I ask myself, is this thing trading at the all-time highs? Yes, it is. Do I want to buy something at the all-time highs? Absolutely not. What I want to buy this thing is in a possible pullback where the price might, the word here is might, okay? Because remember, guys, technical analysis, fundamental analysis are for engagement purpose only. What's going to make us money as an option seller is position size, trade management, and risk management. But these things here, we can also use as a confluence for us to hide our strike price, okay? So looking at the structure to the left here from this chart, I can see that if we were to sell off here badly, where the price might find value, that has found value before, at this level here, very obvious, okay? And you might ask me why. Simple. We got this resistance here, okay, which can become a possible support. We got this resistance here, which can possibly become a support, and we got this resistance here, which possibly can become a support. So we got one confluence, two confluence, three confluence that the price might find value here. From the buyers, the buyers might find value here because we got 1, 2, 3 support, and also because if we take the ruler here, we will be already down 18%. 18% for us to start to put our strike price. It is an amazing price. Okay, amazing, because if you get a sign here at 18%, and if we drop here to, let's say, 25 here, you can drop your strike price to roughly 20%. Is that good? It's amazing because you're going from the all-time highs to 20%. That's not too shabby whatsoever, okay? And then what you're gonna do is we look at this price here, which is roughly like what? Maybe 470, something like that. And if I look here at my indicator, 470 is roughly something like this, which is roughly 18% out of the market, like we just measured. So I'm happy to do that, to get assigned at the first strike price at this percentage discount. So we're gonna look at this line here. It's roughly $470 at this level. Remember, we have our support here, plus our strike price, plus our DT. So far we found the support, which is $470. Now we need to go to the TastyWorks and need to find our strike price and see if it's worth for us to place that trade, okay? So back to TastyWorks, we're gonna stick to our DTEs between 30 to 60 DTEs, something like this. Let's get something in the middle here. Let's say 39 DT. If we open here this 39 DT, and by the way, as you guys can see, we're still trading, guys, the SPY. So if you go all the way down here to $470, which is roughly all the way down here at this price here, okay? $470, as you guys can see. So at $470, we're gonna get a mid price here of roughly 0.62, okay? Do you wanna sell a cash secure put on a product that's trading at $584, if you get a sign at $470 and collect 62 cents, no thank very much. That's not for me. So basically we found our support. We found here our strike price. Now we need to find, guys, our DTEs. Because remember this curve here, this is the 30 decay. We got something like 60, 45, 30 and 0, okay? We need something around here. But the more we go to the left here, 90, 120, this curve is gonna be flat. But guess what? That's fine. That's fine. I'm not playing short game here. I don't care if this curve stay flat here for 6 months and then bang, decay in the last 3 months, 2 months, 1 month, whatever. I'm not in the rush anyway. Am I going to tie up some capital? Of course I am. Do I care? Not really. Because I want to collect here decent premium here for me to sell this $470 strike price. So what we're gonna do now, we're gonna do our DTE. We're gonna increase our DTE to say, let's say for example 60. If you go to 60, 470 will give us about $1.13. That's okay. At least we're collecting $1, at least. Okay, and the deltas here, number 4, very low deltas. The risk of being assigned here, guys, it's very low. So basically we have here a 96% plus probability to be trading out of the money. I'm not even talking about delta yet. Delta will be the second topic of this strike price selection. I'm talking about here support, strike, and DTs. So basically we found this in the chart, found this in the option chains, and then now we found our DT. So 60 it is. And we can even go maybe higher. We can go, let's say, 88 DTs, $470 will give us a good premium. Will be giving us about $1.79. Okay, this will be the middle price, $179 per contract. That's not too bad. And as you guys can see, this line is also 2 STD. If you know what I mean, 2 is standard deviation. So basically we have here at the money 1 STD and then 2 STD. So basically we found now our DTE, which is 80.80. We found our strike price here on the option chain. We still collect a decent premium. We still put the strike price at 2 standard deviation from the current stock price. And we found some kind of support if the price were to fall a lot, which it is 18%. The price might also find value at this level. So basically this was our first concept, which was support, strike price, DTE. So we have our support here at 18%, we have our strike price at $470, and we have our DTE at 80 days. So you're done. The first one, it is done. Great, amazing. Okay, I don't know if I got I've got a pen here, but let me see here if I got a pen here so I can mark that thing there for you guys. Let me see. So pen, let's see, bang, done. Okay, great. The first one is done. Second one, guys, deltas. Deltas, it is very simple. If I go back to TastyWorks, okay, people say, oh, you're gonna stick here to 45, 30 to 60, and delta is supposed to be between 12 to 16, or maybe 16 to 30. The way I do is like this, okay? Very simple. I'm gonna explain to you guys. So if I go back to the chart, always look at the chart, guys, just to have an idea, rough idea what the price is doing. If something is trading at the all-time highs, I want to collect a delta. I want to trade the delta, guys, between 12 to 16. If the product is trading at 20%, like this level, 18%, I can go between 20 and 30 deltas. These are deltas, okay? But if we are all the way down here at 30%, this is 30%, this is 18%, okay? And this is all-time high, 18%, 30%, I'll go like what? Maybe I go 45 to 50 deltas, which I'm gonna show you guys, which it is my next topic, which it is in the money strike selection. But now, let's say that is all-time highs, which it is right now, as you guys can see, right? In this case here, what you're gonna do is, back to the chart, let's say we're gonna stick to our 6 DTs. I wanna collect something, I wanna trade something, guys, between 12 to 16. All right, so 12 to 16, I'll get here a 15 deltas. Okay, a 15 delta here will give us $3.66 per contract with a maximum PNL of 367. And another thing here, as you guys can see, okay, look at this. We still are one STD from the price. Why? Because now we are looking for deltas. We don't look anymore for SSD. Support strike DTs. We look now for deltas. We are concerned here about the deltas. Why? Because this delta here will give us a probability of profit of 85%, and we are happy there. As you guys can see here, 80-80. Okay, let's call that 85. So you guys get what I mean. So we are all about deltas, and that's it. And of course, when you go between 12 to 15, because the stock price is trading the all-time high. But if it is with a big pullback, you go more aggressive in the deltas. You go like something like 20. If it is like trading at 30%, I'll trade in the money, which I'm going to show you guys in a second, okay? So the second concept, it is very simple. Where the stock price is, you put your deltas, like 12 here, 16 here, maybe 30 here, okay? So you look at the chart, the higher the chart is, the lower the deltas. Like the higher it is here, the lower the deltas. The lower it is here, the higher it is your deltas, okay? Very simple concept as well. So the second one here, okay, it is pretty much done, okay? 31, in the money. Like I said to you guys, very, very simple, following same concept. Let's say, for example, the SPY dropped all the way to here, okay? As you guys can see, 31% pullback, which is give a strike price of roughly $400. Guys, if I'm down, if the stock market is down 30% on one of the best ETFs you can ever purchase, okay, the best pretty much, high liquidity, high volume, and narrow spreads. What else, guys? It's just amazing, amazing product to trade. Probably the best one ever created, the SPY. So if this thing is trading at 31%, I'm gonna look for trades, guys, at the money with deltas with roughly like what, 50. Why? Because I'm gonna collect here massive premium. And if I get a sign, I'm getting something here that I love to hold. I'm willing to hold. I want to have the SPY for the long term at 30% pullback. Because from here onwards, it's a gambling where the stock market is going to go. It can easily recover from here. And it can trade down at what? 10, 15, 20%? If you buy the SPY at 30%, if the SPY go down 20% more to 50, you're supposed to be the happiest person ever. Because if the SPY goes to zero from 30%, you're gonna have way more things to be concerned than your trade alone. But at 30%, I wanna trade something at the money with a very high deltas, okay? So basically, going back to TastyWorks, what you're gonna do is you're gonna clean everything here. We're gonna go even a little bit short on the DT now. Let's say 25. Why? Because you're gonna collect a lot of premium in a short term. Because this curve here, guys, is gonna be here. We're gonna be trading here now with a very high premium, very high deltas. Okay, because volatility here, guys, is gonna be very, very high at this point. Okay, at this point, with the stock trading at 30%, stock, ETF, index, commodity, whatever, guess what? The volatility is going to be very, very high. The premium is going to be very, very high. Then you can get a strike price selection here so that you can time decay very fast, okay? So in this case here, 25 DTs with the strike price at the money, with the deltas are pretty much 50, as you guys can see. We can even make here, guys, delta 15. That's fine, okay? That's completely fine. We like what, 60 cents in the money, not a problem. Or sometimes, to be honest, I even move this thing here, guys, even more, okay, to let's say 70 deltas. Why? I'm gonna be like what, $17, okay, above the stock price. But at this point here, this 583 will be 30% down from the all-time highs and not the all-time high itself, if you guys get what I mean, okay? So this 593 is going to be roughly 20%, and this 583 is going to be roughly 30%, not the all-time high, okay? Theoretically speaking, just for illustration purpose, okay? So I'll be trading even in the money because I know, guys, over time, the stock market might drop, bear market 2022, but it must recover. It has to recover. It will recover. It is what it is. But what about if you're gonna bear market for 2 years, stiff shit, 3 years, stiff shit? Everything that I will do in this channel, that I teach you guys, that I show you guys, is everything thinking about what? LTI. Long-term investing. Okay? We don't do day trading, have none of this nonsense. Everything here is a long-term thing with a proper position size, risk management, and trade management, okay? So this will be our third concept when it comes to strike price selection, which it is using our in-the-money concept with very high deltas, okay? Now, I want to show you guys annualized rate of return. You can combine this thing here with this, with this, with this. Every time you guys have a strike price for here, for this one and for this one, you can chuck that into your Google Sheet, Excel spreadsheet, whatever you might have, and you can calculate here your annualized rate of return. First thing first, you calculate your rate of return, and then you multiply that by 365, divide by your DTE. Okay, and then when you're going to close the trade, you cancel the DTE and you divide by DIT, days in the trade, to see if your annualized rate of return is still worth to close the trade or not. Okay, that's what I do myself. Let me go back here because I don't need all this mess here on this thing here. I think we just got stuck, but anyway. So let me see if I can raise her. Okay, let me raise this one here. We don't need this mess, don't need this mess, don't need this mess, no 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 this mess. And then we have done, and this one, we have done those three. So now we're gonna cover this one here, okay? So very simple. What you're gonna do is we're gonna come here to my lovely LF cash secure put calculator. I do this for every single trade that I'm going to press the trigger, guys. Very simple, okay? Let's say, for example, this is old data because I was using this thing here a long time ago. But let's say we're gonna trade DDX, Google, METDR, MOS, or MOS. Okay, of course, different expiration date. Okay, so in this case here, strike price, premium, strike price, premium, strike price, premium, and so on. Our DT, days expiration, and our things here that we got. All right, so basically, after putting here all the things that we had at the beginning, like entry date, the price already calculated from the Google Sheet, bring from the Yahoo Finance, our ticker symbol, our strike price, our premium, and our expiration date, that give us these calculations here, okay? So as you guys can see, my threshold for annualized rate of return, it is, guys, 15%, okay? 15% annualized rate of return. Why? Because my goal is to get between 12 and 15% return per year. If I get 1% per month, I'll be over the moon. But 1% per month out of $1,000 is nothing. Yeah, but the problem is not the 1%. The problem is your portfolio. It is very small. So in this case here, annualized rate of return will give me 6.8. This one here, 33%, 47%, 7%, and 3.3%. Of course, to one decimal place. Guys, this trade here, I will not be placing straight. I will not be placing straight. I'll be placing this trade, and this trade. Why? Because after the calculation, after checking the strike price, using my SSD, support strike price, the expiration, using my second concept, which was the deltas, and use the third concept, which was in the money. In the money, not much because I'm already in the money, doesn't matter. But deltas and support, like for example, let me go back here, I'll show you guys. If you do apply these two concepts here, this one here, and this one here, guys, the Excel, you must to have. Because the thing is, this one here, don't bother because you already trade something with the 50 deltas anyway. You don't care about annualized rate of return. You're going to be very high. And this one here is the fourth one. I'm showing you guys why now. Okay, but going back here, because I'm not trading this trade here, what I do is I have to find a different trade to trade. Simple. Because sometimes the best trade to trade is just not to trade. Because all the risk management, like I said to you guys, is done before you press the trigger. After you press the trigger, your deltas, your theta, everything go out of the window. Because guess what? Nothing stays equal. Remember, that's the time decay, that's your delta. Taking consideration everything, all else being equal. But guess what? No else being equal all the time. So you can forget about them. But when I look at these numbers here, and this analysis, before I press the trade, guys, this is a no, this is a yes, yes, yes. Simple, because if I place it straight, I'll be getting 33%, 46%, and 3.3% annualized in terms of rate of return. Thank you very much. I'll press the trigger. Simple. This is my fourth concept that I use when it comes to pressing the trigger for cash secure put, guys. And I think you guys should also have something like this. There are more things you can select here. Sorry, of course, you can put here high quality business if you trade in stocks, companies with a nice balance sheet. What else, guys? Companies with a valuation, I'll say 5 billion plus. Companies which are blue chip stocks. But because I trade pretty much futures, index, ETFs, and commodities, I don't care about these, guys. And for those of you that are beginners when it comes to trading options, then I really suggest you pretty much cancel this. Of course, when it comes to ETFs, we're going to get way less premium if you were to trade Tesla, for example, or maybe NVIDIA. But guess what? I don't care about premium at the beginning. I care about trading, placing proper trades, making money, learning, and getting the G's of trading options. That's the main thing, okay? Guys, thank you very much. This is all I have for you for today. You can spend these concepts here for something else, but these are the concepts, few concepts, simple concepts that you must have when it comes to trade cash secure put, to trade options. And this was the main thing, guys, that made me very successful in 2023 with all these sort of returns with TastyWorks, with a proper strike price selection and with a proper position size, proper risk management, and proper trade management. If you don't know how to manage your trades, guys, forget about that. Before you go, for example, look at this. Come here to our channel. I put a playlist here, how to close trades. Like, for example, how to close a short call, how to close, let's say a long call, how to close a long put, how to close a short put, and how to close options, which is the whole thing combined. Okay, so you got the whole thing here which you guys can go and watch. How you're gonna close your trades, because if you sold a put and you sell another one, you increase your risk. Okay, if you sold a call, you sell another one, it's even worse. You can get pretty much, you can ruin your account. Okay, you can go pretty much to zero if you increase your risk when it comes to short calls. If you buy a long call, you buy a long put, and you buy another one on something that's already time decaying, guys, you just losing more money. So learn how to close your trades. Okay, very, very crucial that you understand this concept. So if you don't know, go back to my channel and watch this video. But strike price selection, it is one of the variables, one of many variables that help me to be very successful when it comes to trading options. Okay, guys, thank you very much. Don't forget, subscribe to the channel, leave your comments below, smash the like button, share this video with your friends. I'll be much appreciated. Okay, that's the only things you guys can do. It's free, by the way, in a win-win situation for us, so we can still provide you guys with free content. If you have any idea, any feedback, leave down below in the comments and I'll get back to you as soon as possible. All the best, stay safe, and happy investing.